Good morning and welcome to Time Price Analysis. This morning, which is Friday the 2nd of March, I thought we'd take a look at the main US indice, which is the S&P 500 index. And after all the recent volatility and some downside action, it'd be interesting to see perhaps where we expect this to go from here. So this is a daily chart, long-term daily chart of the S&P 500 and counting up off the February 2016 low. This is the final 5-wave sequence to complete a primary degree wave 3, which we expect to complete later this year to early next year, up in excess of 3,200 SPX. But off that 4, we've got waves 1, 2, and 3 at minor degree in place at the recent high. And then we had this very sharp, swift decline. And there are 2 ways of looking at that. Either that is all of the minor degree wave 4 done and dusted. Didn't quite get down to the target we had for it, which was at 2478 to 2422. It came just shy of the 38.2 retrace, in fact. So it hit 2534. And since then, we've seen a fairly sharp move to the upside. So on this time scale, we either have an A wave in place, B wave back, and we're going to come down into this target box next. However, if we now look a bit more closely, you can see that this B wave actually hit the 764 retrace. So that's these red fibs along the right here of the entire move down. Which would be the typical, if we'd look for the 618 to the 764 for the B wave. And this move down we've seen over the course of this week at yesterday's low hit the 50% retrace of this move up. So what we need to now do is drill down and look at the structure of this subwave here and the pullback that we've seen since. And obviously we've marked our support zone in here because potentially if the wave 4 is already in place, we can count 5 waves up to the recent high for the wave 1 of the next degree up. Remember that the waves will subdivide. So this wave 5 will in itself subdivide into 5 smaller waves at minute degree. So if this is a 1, we've hit the minimum expectation, which is the 50% retrace for all of a wave 2. Coming down and looking at it on the 15-minute timescale and counting off the top here, we can count 1, 2, 3, 4, 5 to here, an ABC structure back. And if we run our Fibonacci extensions and assume for a moment that we're going potentially lower, then we have a 1, 2, 3, and that hit a 2.0 extension, which is a fairly common level for a wave 3. And we've got this what looks like a corrective move starting to the upside. So what I'm going to be looking for over the next day or two, the next couple of sessions, is to see whether this area here at 2707 contains any further upside, and then we take this low out. And if we see that, then I would expect to see the S&P 500 drop down here to the 2627 region. And that would be a 5-wave structure to the downside. Now, as such, that would be an A wave. We're not going to have a corrective as a standalone 5 waves. And if that's the case, then I'd expect to see an A, B, C down to this 2422 to 2479 region to complete the wave 4. Now, if I come over and look at this in the ES mini futures, so again on the daily timescale, we've got the same looking pattern straight into the 50% retrace as we have on the S&P 500, which is what we'd expect to see. But if I drill down to a 20-minute timescale here, again 1, 2, 3 into the 2.0, A, B, C for the 4, and then we get the 5 down. However, we can count that differently. This 5 waves can be an A, B, and another 5 waves down here for a larger degree A wave, small B wave back, and we have a 1, 2, 3 into yesterday's low. So still expecting this A, BC structure, and then a drop down here. And the level that becomes most important down here is 2642, because if we come over to the right and look at these pink Fibonacci extensions, that is where the length of this C wave would be equal to the length of the related A wave as projected off the top of the related B wave. So again, this region here is important up to 2711 in the ES to see whether that contains any upside. I would expect it in actual fact to stay below there, just under 2700, and then drops down. And where that next drop reaches, if we hit this 1.0 extension and start to bounce, that very strongly favors all of a wave 2 being in place. And again, if we come over and look at the structure of the ES off the low, we can count a 1, 2, 3, 4, 5 up into the recent high, and it came up and hit the 2786 extension for that peak. So the indices are doing a great job of masking the larger degree intentions here. Either which way, I don't think we're very far off in terms of time seeing a significant low in the US indices. So it's time to get your shopping list together of stocks to own and to add to once this correction's over, either within this zone here from 2583 to 2626, or from a little lower down here to the 2451 down through 2333 would be the worst of it, but I really wouldn't expect to see it get that low on this move. What do we expect after that? Well, coming back to our longer term charts of the S&P 500, and this is the count coming a weekly chart all the way off the March 2009 low, and you can see that this primary degree wave 3 has targets right up at 3383 to 3452 in the S&P 500. So some considerable upside ahead of us yet before a much larger correction that will take 18 months to 2 years to complete following this top later this year or early next year. Okay, any of you that are interested in the stocks that we're going to be adding to our portfolio, both for the main portfolio, ETFs, and then some of our specialist portfolios in the precious metals and mining sector, then hop over to timepriceanalysis.com and take a trial membership with us.